Have you ever thought it possible how to achieve a 0% tax rate in your golden years? Check out the short video and I'll show you just how to do that. I'm Ryan Wheelis and welcome to the On the Money YouTube channel powered by Allied Wealth. And today we'll spend a little bit of time talking about how to achieve a 0% tax rate legally in retirement. And this is a secret that it's not really a secret. It's well known. It's just a strategy oftentimes we don't set ourselves up to use. And I'll use an example here in this particular case of a actual client that had retired, and his at 59 and a half, right at 59 is when he retired. And he had about 2 million bucks. He had $1 million, $1.5 million in an IRA, and about $500,000 in a brokerage account, a non-qualified brokerage account. And he inherited $2 million in almost $2.5 million in Exxon stock. And we were talking about this, this blessing from his mom and dad, and how to best utilize it going forward. And we had planned to do all kind of Roth IRA conversion strategies and take Social Security then and all this stuff, but this really derailed the planning. And the reason why I did, folks, is the Exxon stock pays a handsome dividend, okay? And my client never needed more than about $100,000 a year in income to live the lifestyle they wanted to live, right? So basically, we were able to take advantage of the 0% tax rate. Here's how you get there. You have to have a non-qualified account to do this. And again, his Exxon stock he inherited from his mom and dad certainly qualifies for that. And if you do, you can have a total income for married filing jointly under 65 of $116,950. And you say to yourself, well, Ryan, that doesn't make sense because the upper bracket of a certain tax bracket for dividend income is $89,250. How could I have more than that? Well, you can have more because it sounds backwards, but you add the standard deduction onto the $89,250 bracket, and that gives you the $116,950. So you could actually have $116,950 a year in income, dividend income, at a 0% tax rate. Which is pretty cool because if you look at taxable equivalent income, like if you were taking the income out of an IRA and paying tax on it, how much would you have to take out to net out $116,000 a year in income? It's probably closer to $150,000 a year. You'd have to pull out of your account, give Uncle Sam his portion, and you keep $116,000 to be able to spend and finance the lifestyle you wish to live in your golden years. So when you think about this, if you have this capability, and by the way, if you don't, you may be able to do what's called a net unrealized appreciation transaction. Go back on the channel. I did a video on that recently, and we could be able to set you up for the same kind of thing. But if you were able to do this, this is a great argument to delay Social Security because income is stacked. So if you have any bank CD income, interest income, Social Security income, rental income, it all gets stacked on top of your dividend income. And that could kind of bump you out of that 0% rate opportunity. So in this case, I actually recommended that this gentleman not take Social Security until age 70 because it would mess up his tax savings. So it's a case to think about delaying Social Security. The other caveat too is we also had a Roth conversion strategy we had built for him, and now we're going to delay that because he's like, well, why would I pay any tax to convert a Roth IRA right now? When I don't need to, right? I've got a 0% tax rate for the next, now it's, push the age when this gentleman's 70 or when this gentleman's RMD age, the RMD age requirement will be 75. So he's going to have 15 years of income, at near 0% taxes. Now, obviously when he hits 70, we want to take Social Security because it doesn't grow anymore. We're leaving money in the system that we shouldn't do. So, pretty cool little strategy there, right? So that's how to achieve a 0% income tax, in retirement, utilizing dividends. So, and also if you're single, you can do the same thing. The max income you could have coming in is actually $58,475. It's 44,625 plus the 13,850 standard deduction for somebody who's age or who's a single filer. So, pretty cool stuff there. But there's a couple other ways to use this, folks. If you are low income, right, you don't have a lot of income, maybe you're living off cash savings from the first couple of years of retirement, or you're doing something we suggest to the channel to have 3 years of income set aside in a cash bucket, earning some interest if we can get it, right? But it's in a cash bucket, and we're drawing from that instead of drawing from our accounts that are in the markets. A little better strategy, and I can show you that, by the way, if you go back on the channel and some other videos. But in this case, let's say that was you. Well, if you bought a stock in your brokerage account, and let's say that you paid, I don't know, $5 a share for the stock, and the stock was trading at 50. Well, we could actually sell the stock, all right, and buy the stock back, pay 0% capital gains or 0% tax of the capital gains as long as we stay underneath that 116,950 threshold for a joint couple. And you would realize that gain and have a new stepped up basis in that stock and pay zero tax on that gain. Now, I say that, people go, well, wait a minute, Ryan, what about a wash sell rule on that? I thought I had to wait a period of time, 30 days, to buy that stock back. Well, the wash sell rule only applies to writing off capital losses, not capital gains. So pretty snazzy little trick there to say, hey, I've got, I don't need income distributions. I'm not taking Social Security. I don't have a lot of interest income, but I do have these stocks that I'm trading, and I'm going to use a strategy to say, hey, I'm going to go ahead and lock in those gains and not pay any capital gains on those gains. So pretty cool strategies there, folks. Was reading this recently in the Wall Street Journal and wanted to share this with the folks on the channel. And one other thing you can do too is you could actually do some Roth conversions or some portfolio rebalancing, kind of taking advantage of the same rules. So there's a lot of unique ways to utilize these strategies, but just make sure you understand there are absolutely ways to achieve a 0% tax rate in retirement. And your CPA, by the way, may not be the best person to guide you on this because it has a lot to do with investment income and that sort of thing. And a good advisor can help guide you to see if you have the capabilities, the way your money's structured in your golden years, to see if you qualify for a 0% tax rate. Because if you watch the channel, folks, you know that I believe a lot of people write about healthcare, being the largest expense in retirement, and I actually believe it's going to be taxes substantially by a mile. So anything we can reduce, anything we can do to reduce taxes helps your money go a lot further in life. It also allows us to be able to realize a lower rate of return, which means if we're getting a lower rate of return, oftentimes we're taking less risk, and the less risk we can take in retirement to get to our goals and where we want to go, the better we are in the long run. Well, folks, as always, thanks so much for tuning into the channel. If you like the content we're putting out, give us a like down below, hit the follow and subscribe button as well, and we'll notify you when new videos come out. Be well.